Happy to be here. Our next guest is Kestutis from Eastnine. It's a real estate company, but please introduce yourself and the company.
Okay, thank you very much, and very nice to be here. My name is Kestutis Sasnauskas. I'm CEO of Eastnine. As you hear by my very strange name, I'm Lithuanian, and I actually grew up in Vilnius and spent all of my summers next to the Baltic Sea during Soviet time. So my horizon was not Sweden, but it was actually Russian military ships. And now I'm spending my summers on the other side here in Sweden and looking eastwards, and I see beautiful sailing boats and cruising ships and completely different world. And I couldn't believe that would happen in my life, at least. But I'm also CEO of Eastnine, and Eastnine is a very exciting company growing on the eastern side of the Baltic Sea, the most exciting part of European Union, as I would say. We are in Vilnius, we are in Riga, and we are in Poland right now, and managing only office properties. So we are a pure property company with focus on offices, modern offices.
And I guess for most of the listeners, they might be more familiar with the Swedish or the Nordic office markets or real estate markets in general. What sort of differentiates your market from, say, Stockholm or Gothenburg or Oslo the most?
The difference probably is that market is very, very young. Market is, I wouldn't say it's not mature, but it's just young. There's very few office properties around in general. So if you look on our market, and actually this is very, very fast growing. So if you look at most of, if you are, for instance, in Warsaw today, and you look on Google Maps, you would probably not find those buildings that you are looking for the address, but you see completely different skyline. And this was actually the case for the Baltics for a very long time. It is also now or it has been also for some Polish markets. Poland, of course, is a very, very big market. We just entered it. And in the Baltics, it is a fast growing, but we are coming with a history where, during Soviet times, there were no offices, and everything has to be built. We have a similar amount of people working in the service industry, which require offices, but we have only 1 square meter office in Vilnius per inhabitant, and we have 7 or 8 in Stockholm. So the market is in a way young, but it's undersaturated, and it's growing fast. It's developing. I mean, Vilnius is around 1 million square meters of office space compared to, and the size of the city can be compared with Gothenburg. And it's capital city, so it attracts a lot of people. The market is growing and demand is growing. So of course we haven't seen this huge development as we've seen in Stockholm in terms of rent development, huge demand. Demand, of course, is very strong, but the rents haven't picked up.
Due to supply? Or?
It has been strong supply, but actually the rents have been stable for quite a while, and now they are picking up a bit more. And it's a very, very fast growing market. So in that sense, I think it's very exciting to be there because we are acquiring properties at significantly higher yields. Yields are 200 to 300 basis points above. We have same financing cost as we have in the Nordics. We're financed by the Nordic banks mainly, and we have a combination of relatively low rental levels. So this combination makes capital values still very, very attractive. So from the risk perspective, the downside risk is significantly smaller. If you look on the demand side, we are working with multinational clients. Many of our client meetings are held in Swedish, so it's not so different in any respect, and it's a European market. So there are no big differences, I would say, compared to the Swedish market.
And speaking of those, client meetings in Swedish, what's sort of the main driver of, do you think, ahead maybe, or looking into the future, what's the main driver of sort of increased or even more office demand? Is it Swedish or Nordic companies outsourcing employees to these markets, or is it general population growth, general employment growth, onshoring back to Europe?
For a long time of period, we had negative demographics. So the demographics were playing against us. Now it changed actually primarily in the major cities like Vilnius, Warsaw, or Poland has a bit of a different story, I would say. But if you focus on Vilnius market, now it's actually positive, and we see a lot of jobs being created. We see a very strong demand, of course, still by many international companies, Swedish companies, putting their part of their business and gradually growing it. We see, our biggest relationship in the Baltics is with Danske Bank, for instance, followed by Telia and Swedbank. So, all the very famous names here in Sweden. And of course, those operations we probably saw in the very beginning with relatively simple tasks being performed or being moved, but now those tasks are becoming much more sophisticated. So we see a very strong competence centers being created, and we see those competences actually now create even more attract even more different players from multinational players actually to find those competences, because certain competences are very, very difficult to find. IT is one of those segments where we've seen very strong demand both in the Nordics, but in the Baltics you get the same quality cheaper, and of course you can rent premises cheaper and provide even better premises quality-wise than you can provide here. So in general, the market is kind of very young, very dynamic, very fast growing, and we've seen most of our clients are on the growth base. They are struggling with sort of growth plans in terms of, both recruiting, but also we more often speak about, how do we expand, how can we create more space rather than the opposite. Of course, all the market trends in terms of, more efficient office usage, less square meters, have been present in our market as well. So all these trends that we see globally, they are with us instantly. So there is no lag or no difference. But at the same time, we see that since market is so unsaturated still, there is very, very strong, demand is very strong. And of course now, having the negative effect from increased interest rates and slowdown in construction, we'll probably see a higher push for rentals going forward, because there's very little supply coming up, and of course the demand still remains quite strong.
And given how you speak a lot about how young these markets are and they're fast growing, what sort of what does the competition look like in those markets? You're there. Are there other sort of international companies?
The picture changed. Of course, we were competing with big German buyers, with American buyers in terms of property acquisitions or investment. Now, of course, this universe has changed quite a lot, because most of people are focused on their home markets, on their own financing problems or other challenges. And we are in a bit unique position because we have a very strong cash position today, and are able to grow. And for us, it's an amazing opportunity, to be honest, to be in this market and see those opportunities coming up. And in many cases, situations where we're not able to buy, or we wanted, but it was not for sale. Many of those opportunities appear in this market. So from that perspective, I think we are very, very happy to be in this situation right now. But in general, I think the most important for us is this long-term trend of continuous growth. And I think you should never forget that the Baltics, the Polish market, have been actually growing faster than EU average if you look 20 years back, 15 years back, 5 years back, and even now. And this convergence curve towards the sort of more developed world is continuing. I mean, Germany is a very big neighbor for Poland. Nordics is a very big neighbor for the Baltics. Naturally, of course, Baltics have a lot of interaction with German markets as well. So all of these more developed markets are actually pushing positive development. On top of that, we see a lot of nearshoring now to moving into Poland, primarily. So Polish market has been more in the headlights from the negative political point of view, but and I think it's very, very important that it's very, very good for this change that happened for Poland, and democracy is very important. But at the same time, you know, the other part of Poland was quite neglected and not seen. Actually, this enormous, strong economic development that has actually been going on and is continue going on. So, I mean, it's one of the, it's probably the only, or the European country that has lowest unemployment rate. It has strongest growth. It has a variety of industries. As a big country, it's everything from production, transportation, logistics, being a logistics hub, to, you know, variety of services. And probably most of you don't know, but Alexa comes actually from Gdansk, from Poland, which is is it Google product? Yeah. Yeah. So it's you know, a lot of these type of developments are taking place in that region, and I think they are just not seen by many.
Right.
And we are happy in a way because we are pretty alone in this market.
Right. So I mean, it's certainly easier if you're alone, but I mean, there's always competition in all markets, in all sort of product categories, etc. If we try to sort of dig deeper, what sort of makes you stand out of competition? I guess you touched upon, you know, German buyers or German property funds being active in these countries, and maybe even US or UK. They might not be there for the long haul, or are you sort of pushing that your property management is better, or your ESG rated buildings are better, or location is better, or what's sort of the angle?
I think the market per se is pretty similar. So if you look on you know, capital cities, if you look on prime offices, they are demanded all across the border. The rents are still very stable in Stockholm for this. They are growing in Warsaw, they are growing in Vilnius, they are growing in Riga for prime product. So people, of course, downsize a little bit, but they also want to offer better quality premises and so on. So this trend, this mega trend that we've seen already taking place prior the pandemic, it actually accelerated with pandemic and post-pandemic situation. So this market, this development happened. For us, what is actually a bit unique is that both the Baltic market and Polish market historically are dominated by foreign players, which means usually funds that place see properties more like bonds. I would say, with external management, everything, all services being outsourced to third parties, and there is no kind of, I wouldn't say the service is bad, but it's just not very personal. If you don't know who the property owner is, basically, as a tenant, in many cases, and you don't have a direct contact you have with some service provider, and these providers change, and so on. There's very little continuity. So we are one of the first real estate companies, pure real estate companies, doing our own service, building up our own organization, and being very, very long term, because we also buy to hold. We don't buy it as a financial product to flip it after a couple of years. So from our perspective, I think we're different. We see that already in the Baltics, that we have very high net promoter score among our customers. We are appreciated, and that actually, allows you to renew contracts easier, and so on. So that is very, very good for business, and it's good for our clients that we actually meet their requirements. I mean, having in most cases, growing companies, we have some number of examples where we had a relationship that started with 3 people and grew to 360 people, and so on. So to cope with the growth is also challenging, and you need to trust your relationship, that you can help each other, because in many cases, we get calls. Okay, we will hire 100 people in next 3 months. Can you help us? So this is a different approach, and I think this is a huge angle and a huge advantage for us. I think on the other hand, the presence, a very, very strong presence of foreign ownership, creates a lot of volatility as well, because when you are hit with the problems at home, you tend to focus more on home markets, where it's safer. And the reason for that is mainly historic, because in these markets there were no capital. So capital flew in from abroad, and I mean, Polish market is almost 97% or something is owned by foreign players. So it's completely market without strong owner local institutions. And I think stability here in Sweden, for instance, and the transaction volumes and everything is very much based on very strong local institutional ownership, but also foreign participation. So I think this balance will at some point of time will disappear. Of course, there is the economic growth that is happening in this region creates a lot of capital values right now. So there's more and more local capital being invested in the segment, and probably in the future our main competition will be local rather than sort of foreign. And in this environment, of course, we are pretty alone, because most of the foreign players have pulled back for various reasons. But
right. I mean, when we look at most companies in the real estate sector in Sweden, even if you haven't gone abroad or expanded geographically, I mean, higher interest rates means that most companies have cut dividends, cut capex, divesting assets, etc. Now you're in a position where you have a large cash pile, you have a very low leverage.
We were very lucky in this. We were very lucky to happen this situation right now, and we work quite hard actually to deploy the money at the moment. So we are looking quite a lot or analyzing quite a lot of opportunities. We are in a number of negotiations, and I would not rule out that we start investing pretty soon.
And when we talk about deploying that capital, is it acquisitions only, or can we sort of return to a world where you can do project development depending on project costs?
I think we will. I mean, we have 3 fantastic projects in our pipeline, development projects. They are all on hold for right now, because we see better opportunities, to be honest, by just deploying into already existing assets, because the returns are simply look better, at least on paper right now. And we will be able to return to those investments. But I think for us, we are a fast-growing company, so you have to mitigate your risks in a different way. So it's a lower risk to grow with strong cash flows rather than sort of building up a development pipeline. And in the future, once those bigger cash flows are developed and are there, then not developed, but I mean acquired, let's say, then we can actually gradually put those cash flows into development projects and take on them very successfully. So We have secured a number of prime locations. We usually, when we acquire, there is always possibility to add on something, as we had done in Tris Bures. We created the third Bure. We have also possibility to develop the fourth. We did similar acquisitions secured similar locations in Riga. So, I mean, it will be a combination, but today we always focus, where we get the best return for the lowest possible risk taken.
And maybe I'm not sure if you want to give any numbers, but right now you have a very low gearing, and you have sort of the opportunity almost to choose your own, preferred level of gearing, depending on how many acquisitions you do or how large acquisitions you want to do. What should we, or investors, what should investors think about sort of the normalized loan to value?
I think normalized we would be around 50, to be honest. But I think, we should remember that our yield is 6.5, not 3.5. And we are already, in terms of the cost of capital, we are already in the adjusted universe. So, and we're still very profitable. So I think, given these two factors, we feel pretty confident that we can, add on acquisitions that still generate us very strong positive returns, cash flow wise. And then, of course, what happens with capital values, they went down. If the interest rate environment will change towards more favorable, we'll probably see an uptick there. So that would be a bonus.
Yeah, and maybe if we fast forward a year or two, where do you see sort of the greatest or the highest possibility that you have made these acquisitions? Is it in Poland? Or
it will be most likely Polish market. Polish market adjusted fastest in terms of yield expectation by the sellers, and Polish market offers much more opportunities. We also see a number of relatively new objects with very attractive objects being offered in the market. So I would think that Poland will be the primary market for us. It is also bigger, and naturally, I mean, today Polish market stands for 20% of our net asset value. Will probably be much bigger going forward, just because the country is bigger as well, and the opportunity is much bigger there. So we will remain focused on our core product, on offices. We will continue buying the sort of prime objects, and this is the strategy, and I would not exclude that we will do a transaction relatively soon.
I think time is running out, but thank you very much for being here.
Thank you, and don't forget to visit the region, because it's totally for be seen, I think, for the moment. So I think the opportunity is fantastic there.
Great, thank you very much.
Thank you.